So we use accounting equation in preparation of financial statement. So what accounting equations says, like assets minus liabilities is equal to owner's equity. For example, that we have the total assets $10,000 is equal to the 8,000 liabilities plus owner equity is 2,000. So it means the both side, the asset side and the liability side of the balance sheet will remain always equal, right? So total assets is equal to total liabilities plus owner's equity. So this is the accounting equation. So look at this example. So if we have any two figures available, we can find the third one. In the first example, if total assets is equal to $25,000, total equity is 35, and we can find our total liabilities. So total liabilities here 21,500. In the second example, if we want to find the total assets, so total equity plus liabilities will be the total assets. In third example, if we want to find out the equity, then we have two figures. Assets minus liabilities is equal to equity. So this is how we calculate the missing figures. Next we have the new keyword, so drawings. So drawings are the money which is withdrawn by the owner from the business for his or her personal use. The person who has invested money is known as capital. For example, $10,000 is invested by the owner, and the $2,000 later on is withdrawn for the personal use, maybe tuition fees for his daughter, college fees, or any other personal liabilities. So that will be subtracted from the capital. 10,000 minus 2,000 personal use. It is withdrawn from the business. So the drawing is the money which is withdrawn by the owner from the business for his or her personal use. For example, capital, like this is another name of owner's equity in the business, and which is the money invested by the owner in the business to make profit, is known as a capital. So money invested means money capital invested. So capital we have $100,000 minus $200,000 withdrawn by the owner. $98,000 is the remaining investment, means remaining capital. So this is the net capital. Initially capital was 100,000. Now this is $98,000 after subtracting $2,000. One more example. If the owner of the business has invested $100,000 and in that year makes $5,000 as a profit will be added and $2,000 as a drawing will be subtracted. So $103,000 will be the net capital invested and also known as owner's equity. Separate legal entities. The person who is running the business is separated from its business. If I am the owner of the business, I have invested money $1,000 and after some time like $200 I am withdrawing from the business. I need to write it down. I need to put this entry in the balance sheet to show like the owner invested money and after then withdraw some of the money. If again in like coming days, if I feel that I need to invest more money, like $5,000 that I will invest it will be added in the equity. So the person who is the running the business is separated from the business, right? Audit. Audit is also a term that we use in accounting. This is the examination of financial statements, means profit and loss account and balance sheet. Examination of financial statements by outside accountant. The conclusion of the audit is the accountant professional opinion. about financial statement. There may be CPA, Chartered Professional Accountant, make a audit on the books of accounts by the direction of a CRA. So that is known as audit, means inspection. CPA, Chartered Professional Accountant, who has met the examination and experience required in CPA Canada. And after then, like some examination and paper is clear, marks are okay, so the CPA will get a license and will become the Chartered Professional Accountant. That is also known as the external accountant, or you can say this is the general accountant. Cost principle of measurement, right, states that assets are recorded at their purchase cost and that the accounting period of the assets continue to be based on the cost rather than current market value. What is the meaning of this? In accounting, that always we will keep assets recorded at the purchase price, which is also known as historical cost, which is also known as cost basis or cost principle, not at the market value. This is a standard, this is the rule in accounting. Materiality means when there is a material effect of showing something to the outsider. For example, the profit we are showing, this much is the profit this year, $5,000, and next year is 6,000, next year is 7,000. So we are showing this one in the financial statement, in the financial analysis, and make a report, comparative report, and upload it on our website. And the people are looking at this report, they are saying the company is growing, so we can invest, right? So this kind of report, this kind of information should be reported. If that report have a material effect, right, if that report, if it is a material to the user, means important to the user, that is if knowing it might affect the decision maker, so decision, so that is known as a materiality. Material effect, main effects. Net earning we have. So what is net earning? Excess of revenue over total expenses is known as net earning, and this is also known as net income or net profit. Net earning, net income, net profit, same thing. Partnership, this is unincorporated business with two or more owners. When there are two, at least two or more owners, that is known as a partnership. And proprietor, one owner, sole proprietor, single owner.